Good morning, everybody. Happy Friday. So happy to be here with you all. This is Jordan with Conquer Trading and Investing, getting ready for our live session, for our Friday session, wherever you are in the world. Good afternoon, good evening, good morning. So glad you are here together. I'm really excited for this session. I really am. Thank you, Greg. Every session is absolutely important. Every session continuing to lay each and every brick. Absolutely. I agree. And that's why I'm here each and every day. But this one is just something special in the air. I could feel it. I'm looking forward to it. We got a lot of talked about how it's all going to unravel. We're going to soon find out. We got a couple of things. We got signal and we got noise. And we got signal and we got noise. And we got signal, right? Signal what? We got Taproot almost ready to be locked in, not activated, right? It won't be activated until November if it's locked in. Now, if you go back to what was happening in the last bull market in 2017, during the mid-cycle dip, that's when SegWit was actually locked in. That was the catalyst that sent it out of the mid-cycle dip and sent it really screaming. Will history repeat itself? Well, I don't know. But it continues to rhyme. We'll be watching that. This is signal, this is noise, and Bitcoiners simply don't care, right? Elon is just at this point, he's just being a little bit foolish. That's fine. It's about all the time that it really warrants this morning over here. We have over here someone else. We have you throwing down signal, throwing out hot signal over here. You heard talk about yesterday or this week about Google getting ready to allow ads once again for the cryptocurrency space. I believe that happens this summer. I don't know if it's July or August that once again, look over here, we're seeing that Alibaba, Google, 300 companies seeking Singapore license for payments and crypto exchange license, including Alibaba and Google. That's signal. That's signal to focus in on over there. We love it. This over here is probably the greatest clarity there is in the market. Let's take a look at it over here, right? We were taking a look at over here. Benjamin thrown out. Look, could someone help me out? What happens next over here? I was happy to oblige. Yep. We're looking at price running into cloned resistance of the most important trend line in Bitcoin. Let's break that down 1 second as we get started here this morning. Let me jump off the log. This is the most important trend line in all of Bitcoin and cryptocurrency. Right? This line over here that he was showing on the tweet is a cloned line of this line over here. And if you want to see what the market's doing, by the way, if you want to just take a look at the symmetry that's on display and being displayed, I'm going to just do another clone over here. And we're going to go ahead and look at this touch over here. Look at that touch over there, right? If I come back over here and go back down to the bottom, you can see again, market bottoming out. It's the most important trend line in all of the cryptocurrency markets. And as we break above it, right, the resistance, by the way, that we're into over here at the bottom, this is minor compared to this one. This is the prime trend line. This is minor resistance. You know, over here, someone noted that yes, a wise man once said that resistance is meant to be broken. Over here, we have Oana. Thank you so much for all the incredible work you're doing for the Discord. You know, putting in the robots, helping us out. We're so grateful for all the work you do. Have fun. I know you're at the Bitcoin conference in Miami. Have a blast. Learn a lot. Share with us what you're learning. Network. Keith, what's going on, brother? Good morning. Good morning. So anyway, this over here, this is light. This is the most important. Let me jump back into it, right? A break above this trend line over here. You know, a break above this trend line. No, I don't. It could be days. It could be weeks or months in the future. That's what's going to bring back momentum and a full recovery soon after. The most important trend line in all of cryptocurrency. Beautiful to see the market symmetry across the board, right? Yeah, Elon's tweet, well-timed as we're into the resistance. You think the guy knows a thing or two about TA? Would you be surprised? Well played, well trolled. Anyway, that's all noise. Someone else noting that we're at the bottom. I saw Greg noting it. I saw it noted by Giles in the Discord this morning that we're towards the lower support of the triangle right now. I wouldn't have been surprised. By the way, we peaked down at the bottom as the non-farm payroll print came in, right? And you saw a little bit of buying off of that. You know, was a buyer stepping into the Bitcoin market, or were we seeing, you know, the miss on the payrolls? We added, you know, there were whispers of adding 1 million jobs. We added 559,000 below expectations. At the end of the day, this is the signal, right? It's the signal that I'm focused in on with the government doling out money for people to stay home, right? Try and find an Uber. With the government giving people money to stay on the sidelines and not come back to work, we're going to be with that labor shortage for a long time. Jerome has been pivoting that, listen, until the labor market comes back to pre-virus levels, we're going to keep it uber easy monetary conditions. Markets so far reacting well to that. You could see JP Morgan, they put this out a while ago and they said this is what we expect. This is a few months ago coming into the end of the year. And I said a couple of things. I said JP Morgan putting something out like this, well, we have to pay attention to see if they're right or they're wrong. We know that JP Morgan is usually trading against their clients. They're known for trading against their clients. So let's see if they're actually right and on signal or what happens in the months ahead. So far, they're lagging. Interesting just to keep watch of from afar. Interesting from afar. Where are we right now over here? Was that the bounce off of the non-farm payroll miss that we saw over there? Or was that just people leaning into the bottom of the triangle? I don't know. But that really doesn't matter at this point. It really doesn't matter. By the way, big shout out to the replay crew. So glad you're here with us on this Friday. Happy Friday. I hope you have a beautiful weekend ahead. Tomorrow morning at 7:30 in the morning, we go to the hospital. They're going to break the water. Thank you for all of your thoughts and prayers. Tomorrow will be the day that Christopher is born. Thank you for your continued thoughts and prayers. You guys are all the best. You guys are all the best. The best there ever was. Right? So anyway, what are we looking at? What are we looking at now and next? What are we looking at now and next? John K. I said follow him yesterday on Twitter. Continues putting out the fire. 2 great tweets today. Let's take a look at this one from yesterday. He's saying so far we're still tracking the 2017 cycle. All right. If we continue to follow the 2017 cycle, we may see a new all-time high by July. Okay, and he's showing like here's in what color is this? Teal. You could see the 2016 cycle, the 2017 bull market, and so far we're continuing to track that. If we were to have that same price appreciation, remember this is where Segwit was locked in. Price boom, it really liked that news. It was a catalyst to send the market. Last time it sent it. Are we going to see something like that happen again? We don't know. We don't know yet. It's too soon. But look at this. He's also pointing out at this particular point. This is how many days since price made the new all-time high? No, John's using how many days since the last halving. He's using, and you can see it's almost the exact amount of days price peaks down and then is coming up and out of it. We will continue to monitor it. John will continue updating those tweets. And then we have Ted over here. Ted showing us this is using yesterday's price, by the way. This is using the daily price. This will update again at the end of the trading day. By the end of the close of yesterday, we were definitely back within our expected range over here. You know, now that price, you know, it's come back down to 65,000. It's trading like at 36,000 right now. Still towards the lower bound over there. Let's see where we close. More importantly, let's see where we are a few weeks from now. Let's see where we are a few weeks from now. That's going to be something important to focus in on over here. This is looking at kind of the work we do. This is since the last halving, by the way, right? And you're looking at the upper band over here. This is the 2012 cycle, the 2013 bull market on the top. And on the bottom is the 2016 4-year cycle, the 2017 bull market. You could see why we've been an average of the two. We've seen some strong volatility to the downside, bringing us down towards that lower band. The question is, do we continue down lower? Do we continue sideways or up for here? But so far, everything, right, Jordan, you're not going to see the price be an exact match of these past cycles. Well, that's the first thing we said a year and a half ago when we started putting out the Bitcoin playlist. But they certainly rhyme. They certainly rhyme. And any way you're viewing the cycle of Bitcoin, and there's so many different ways to view it, there's this rhyming that takes place. The title of the video pointing out, right? It's that coded monetary supply, right? And then you sprinkle on that human psychological behavior. And that's why you're seeing these patterns repeat themselves over and over again. And that was pointed out to me over here. By the way, Benjamin pointed out, listen, if we do have a lengthening cycle, I think people are probably just going to say it's because of things like Elon killing its vibe anytime it gets going, causing delays. And that's not true at all, right? If we have lengthening cycles, I will consider Benjamin one of the prominent thought leaders in the space. There's no question about that. I'm not going to blame it on Elon or anything else. If you're right, you're right. If we enter lengthening cycles, right, now beyond past parameters, we saw that the 2016 cycle was approximately 80, 85 days longer than the 2012 cycle, right? So if we're plus or minus 85 days again this cycle, I mean, we're within the parameters. I'm not going to call it a lengthening cycle, but I personally would be highly focused on his work, right? Desiring nothing else but to be on the right side of the most important trade to matters. And it's pointed out over here, look, just remember, previous cycles on a chart does not necessarily mean that price is going to do the exact same thing this cycle. Of course. But it sure continues to rhyme. And any way that you're looking at the past, people say, well, don't look at past cycles, but obviously people looking at past price behavior for that rhyme in the future, many different ways, right? Anyway, this is important over here. This is, everyone's familiar with Mark Yusko, right? He was one of the founders of Morgan Creek Capital. It was Anthony Pompilano's first digital fund, right? I think BlockFi, the first round of the BlockFi is one of the investments they have under their belt. Mark is a famous investor in the space for a long time, a value investor. Look how he's talking about the past cycle, right? Pay attention to what he's saying about the past cycles and how he views it. We're going to play this for about 90 seconds or so. By the way, it's Friday. It's Friday. I didn't correct Benjamin. I don't think I corrected Benjamin, right? Listen, I was affirming Benjamin, completely affirming Benjamin, and not only saying that, saying, listen, if you're right, you're right. Not only if you're right, I'm going to be there and I'm going to be highly focused in on what you're saying. I want to be what's right. I'm not correcting Benjamin at all. Don't get confused. Benjamin is putting out sincere work trying to add to the conversation, right? That's highly respectable. There's nothing to correct over there at all. I'm on the same page. I'm on the exact same page. There you go. That's what I'm talking about. Yeah, love to Benjamin, right? Putting in effort and educating people. That's where I'm at. Let's take a look over here at Mark. I want you to focus in for a second. Don't listen. Just don't comment for 90 seconds. Try to hear what Mark is saying, right? Here we go. There we go.
All the things that we can put into a model that say the value of the network,
right,
should be, according to this, then this is a model that I borrowed, which means stole, because Picasso said, good artists borrow, great artists steal, that I stole from somebody back in 2014. And it basically uses Metcalfe's law to draw a parabola. And it's a nonlinear logarithmic regression, which most of us are really bad at. Math is hard. And long story short, it said it'd be $10,000 in value in November of 2017. Pretty good call. We hit it almost 6 days to the day. But then the price went all the way to 20,000 and then crashed all the way to 3,000. So the price was very different than the value. This same model says the value by July of this year will be around $100,000. And so,
all right, let's take a look at that. Many of you are probably familiar with this chart. I don't know if it first appeared in 2014 on Bitcoin Talk Forum. This is a post from 2014 where I grabbed the chart this morning because I was just looking for the chart itself to share with you and show with you. I don't know exactly when it first appeared. There's a good chance it's around this time over here in 2014. And they're using this logarithmic nonlinear regression chart over here, right? Now, Mark in this video said, look, this is way people help quantify Metcalfe's law. We know Raul is using Metcalfe's law as a way to track the progress of Bitcoin and its adoption. And what Mark is pointing out, look, this was pointed out in 2014. 3 years later, the price was called at $10,000 in November of 2017. And it tagged it. Yeah, it overshot it by a lot, by 100%. And notice during the bull market peaks, It's kind of like the stock to flow model. It's very similar to the stock to flow model, right? And we expect the stock to flow model to overshoot, right? Not only did it overshoot, it overshot by about 100%, tagging almost $20,000. And then we have over in 2021, we're over here, we're expected to be at $100,000 Bitcoin. Do we expect that it overshoots once again, right? Are we looking at the price, in that price realm that we're yeah, it's a different way to look at it. No, we don't see the past repeating itself, but we are looking at coded monetary supply, human behavior, and we are seeing it rhyme. You have over here John saying, and this is the biggest signal of the day. This is the biggest signal that everyone needs to focus on the day. Because when I look at this and I say to you, I'm going to take away this trend line over here because it's not that important, right? Why do I say that? We're going to break it to the upside. It's a question of when, not if, right? But this one's important because once this one breaks, right, whether it's in days, whether it's in weeks, or whether it's in months, that's going to send back the momentum. And soon after, we will be back towards new all-time highs and back into price discovery. This is the most important trend line over here to focus in on. And what John is saying to each and every one of us, he's like, look, there are many models, right? Reoccurring returns, diminishing returns. No matter which answer is the right one, you should be thinking long term. We're looking for the price to go up massively as Bitcoin continues this massive move towards adoption. This is what we're looking at over here. And he's right. When is who proven right and when? Right? The way that we do it over at Conquering the Markets, we're trying to be highly accurate. We're trying to be highly accurate, not just for each phase of the bull market, the three phases, the bull market phase, the bear market phase, right? A video was shared yesterday, by the way, talking about how they were using the RSI and they were showing during the past cycles that, currently where we are is the place that usually, we range and or test down, that the coming bear market low, where have you heard that before, is usually in this range. And then 2 or 3 years later of that, the bear market's over. That's not, I just want to clarify that. The bear market is about 17 months from here, ends about 17 months from here. Bull market about, peak about 5 months from here. And the bear market lasts until the capitulation low and the accumulation phase, roughly 12 months. Roughly 12 months. What we try to do is be exact as possible, not only for the 3 different phases of the 4-year cycle, but for price movement within those phases. And that's what we're doing over here at Conquering the Markets. So whether or not we're looking at price regressing, right, or more, this is obviously increasing returns from previous cycle, not diminishing returns. Who's right and when do we know? That's important, right? There comes a point in time where you want to know, well, okay, I understand I should be thinking long term, right? Right. And either way, if you understand Bitcoin, it seems like everyone wins here as long as your time preference is correct. But who's correct, right? At which point could you say that the 4-year cycle is broken? At which point could you say that we're not seeing lengthening cycles, right? Or diminishing returns? It's very soon. It's very soon. From my calculations, by November, it's going to be very clear what has transpired and what has occurred. Everyone here knows that I would be the quickest if the 4-year cycle was no longer playing out to be like, listen, this is wrong. Not only is it wrong, who's the most correct? And let's make sure that I understand their work, that we all understand their work, and that's what we defer to going forward, right? Now, whether other people at the appropriate time decide, that's up to them. That I don't even care whether or not. I don't even care, right? What would trigger a bear market in a world with easy monetary policy? John, that's signal though. What the Fed is, what the market is signaling today, and when I say what the market is signaling today, you're seeing over here equity markets. Did you see that they respected our trend line over there? Another touch. We said if we hold this area over here, very bullish over here. Not if we break down, then we're looking for a test of the lower one. This is on yesterday's session. Very bullish structure in place coming back off here. The market is pretty sure that the Fed is going to keep easing over here as jobs are not returning. just yet. There's no incentive of them to return. Look over here. We came back down towards the support. We didn't touch it, right? Should we move this up to the top of that peak over there? Just like fine tune it a tiny bit? Yeah, sure, we could do that. That's fine. We're coming back up into resistance right now. When I say resistance, this was this is when we were consolidating early in the week, right under resistance. This area of light support is where we're coming into right now. Get back up into this. It's a pretty good sign that we should be breaking above that resistance sometime soon, right? What about the dollar? Interesting what's going on with the dollar today. It's been fully rejected. Heath was talking about watch out. I heard Heath say it 2 or 3 different times personally in a few different areas and forums. I don't know if it was on Discord. I don't know if it was here in chat or on his channel or in all those places. He was saying, watch out for yesterday's moves can be completely retraced. And here you are right now. And look, we're coming back and we're coming to test the bottom. Notice the Nasdaq is coming into that resistance. Here you see the dollar, the breakout coming into support, getting back below this channel. And what does that mean? That means that what we're looking back at that continued weakness of the dollar and perhaps another test at that support at 89.43. You could see the 10-year rejected towards the top of the bull flag resistance. So far rejected. How far down this comes, we'll continue to monitor it and watch it. If this breaks out to the upside, there's a good chance that the dollar is going to be firming up here as well. That's not happening right now. It was rejected at resistance. And gold and silver. See, look at that. I mean, look at that. Now, yesterday, clear exit on silver. Clear exit on silver. Get on the sidelines and do not enter back in until you get back above the resistance at 28.30, right? And you can see right now, another area coming into resistance. We're seeing all these breakdowns and retests occurring right now. A retest on silver, a retest on the Nasdaq, a retest on the DXY. All the retests are occurring now. They could still hold, or we could see further momentum, not only be retraced, we could be going back towards that trend in place. We'll be watching it. Silver clearly, wait for it to prove itself. That was the game plan yesterday. Gold held the outer trend line. And we talked about the possibility of that occurring. Gold looking firmer. Gold held the outer trend line. Just making an observation for you. If you watched yesterday's session and you're watching today's session, it all makes a lot of sense. It's all very clear. And that's what's beautiful. So much love to you, my brother. Thank you so much. Glad I saw that comment. Listen, go ahead and smash the like button at some point during this session if you enjoy the time being spent together, if you learn something new and you appreciate all that we do here together. John K. continuing to put out really strong stuff over there. This is what I'm focused in on when I say the most important tweet of the day. No matter which the answer is, you should be thinking long term. You should be thinking long term. It's funny. It's funny. It truly is. It's really the Bitcoiners that have been around the longest who are always talking about having that super long time preference, always talking about just continuing to stack stats. You know, I hope a lot of people are picking up on that. I hope a lot of people continue to work it out. Back to mission control over here. I just want to point out one thing over there, right? If I'm not saying we're going to, right? Is it fair to line up past cycles and say that they don't exactly match, but they certainly rhyme? Yeah. Is it fair to find out when price makes the new all-time high that they tend to line up a lot stronger? And is that what we should be doing as price makes the new all-time high after the previous cycle? Yeah. Is it probably the best thing to do to line them up to the mid-cycle dip once we know the mid-cycle's dipping, making sure that we have that last 150 days? That's not proven yet. I certainly think so. I certainly think that's the best way to do it. We're going to find out going forward. If price maintains the 2016, the 2017 bull run performance, we are looking at 282,000 price target over here. Is that going to happen? Are we going to see diminishing returns? 160,000? Are we going to see this cycle continue to be an average of the two cycles? And is our window, the window that I put out originally 160,000. Once I saw the Fed's response to the crisis, I said that's wrong. I believe because of QE specifically, because of all the money out there and needing a place to go, that we're looking at increased returns from last cycle. That's still my belief, unquestionably, right? Does that put us above the price target I put out in that video? Is about 6 weeks ago, 7 weeks ago, 2 months ago, was a zone between 280,000 and 420,000. Is that where we're going to be? Well, I certainly think so. We will see, though. We will see. And we will see soon. Root updating a tweet over here talking about the progress of the bull market over here. And this is noticeably different, what has occurred. This is lining price up for when price makes the new all-time high. He uses a 70% drop to define the previous cycle. He's not using the 4-year cycle as we use it. The only thing that he's doing, as CTM does, is when price makes the new all-time high from the previous cycle, he uses the previous cycle, defining it after a 70% drop. He lines them up together, and that's why he's in lockstep with us up until the mid-cycle dip, right? And you could see what has happened over here that is different, right? Over the last few weeks, we have come significantly off and quickly and hard. It's worth noting, right? A couple of different opinions over here worth reading. Here, let me go ahead and like this tweet so you could go ahead and find it on my page, or you could just go to the root, even easier and better. Read this, some good insight over there. I suggest reading it and being involved. By the way, we talked about Peter Brandt calling the top, right? I thought he was calling the top of this bull market. It seems that's not correct. I just want to clarify since we brought it up and talked about it. He's saying somewhere around 21,000 would be the ultimate floor for Bitcoin. Now, I don't agree. This is Peter's opinion. He's saying that, ultimately 21,000 would be the ultimate floor, and he was firmly in favor of a bullish continuation, right? So this one is really important over here, though. This is put out by Bloomberg Intelligence for whatever that's worth, but this is very important. Bitcoin is more likely to resume appreciating towards 100,000 resistance of 100,000. I guess Bloomberg Intelligence sees some, I don't know about that. Anyway, Bitcoin is more likely to resume appreciating towards 100,000 rather than sustaining below 20,000. I mean, we're trading right now at 36,000, way towards that lower bound, right? Even the people that are bearish are saying that's the lower bound that they foresee, and they see the bullish continuation coming, right? Think about it. Is this the time to be buying, or is this the time to be selling, calling a bear market? You got to get on the right side. You got to stay on the right side. All right. Let's take a look around and see what else is going on over here. So, hold on. You know what? This is a perfect opportunity, the perfect moment to drop some head snack, see what's going on in the comments over there, and see what we bring up going forward over here. So watch 1 second here as we drop them.
Analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing, the prices might be slashing just to pretend they're in fashion. Hit the like button, comments, and smash it. Boom, boom, Jordan in the room. Grab the bull by the horns and to the moon. Flow from the plateau, make the play. Boom, boom, it's a taco day.
It's a taco day. It's a taco day. And that's straight signal over here. Steven, a straight signal, accumulating, holding, ignoring the noise. I love it. A couple of other things to touch in over here. Ali's asking, listen, Jordan, I'm positioned well into Bitcoin and Ethereum thanks to the work done here on conquering the markets, but I made a mistake, a leveraged position. How to manage that if my liquidation is below 20,000? Small position relative to my balance. Well, listen, a couple of different things, First of all, you're dead on when you're talking about taking those positions, right? Understanding, as Steven's pointed out, accumulating, holding, ignoring the noise. You're talking about a lightly leveraged position over here. And you indeed are talking about a lightly leveraged position with what seemingly is a very strong liquidation level below $20,000. Now, when I talk about being experts only, I think that I mean, every time I've ever talked about it, I've super emphasized experts only, right? But and a lot of people wanted to play around and highly aggressive, right? If you're looking at a $20,000 liquidation level, is that lightly leveraged? In my opinion, absolutely. That is lightly leveraged with a strong liquidity. You're looking, by the way, a 70% drawdown. Any bull market, has not had more than a 70% drawdown. That takes us to 19,000, let's call it 500, right? 19,534 is a 70% drawdown. Do I think that we are entering into a bear market mid-cycle? I do not. Could anything happen? Yep. Did you see, by the way, the World Economic Forum, the new simulation that they've done recently is that if a cyber attack hits the world and takes down the internet, disrupting supply lines all across the world, right? Just of note, the last time that they did a simulation was right before the global pandemic. They happened with the Gates Foundation to run a simulation about what would happen if exactly what happened in real life happened, right? So is it possible that in the future you see some type of disruption to the internet and or power and that Bitcoin, temporarily, my stop loss is 0 for a reason, really came off? Yeah. Should you be risking or investing any more money, especially trading lightly leveraged, than you could afford to lose? Absolutely not. You know that it's a small position relative to your balance, right? It seems to me, better than anyone else, that the risk and the way you're managing here is completely in line and warranted. By the way, we've never seen more than an 85% drawdown on Bitcoin. That's not to say it can't happen, but so far to date, we've never seen more than an 85% drawdown. That takes us back down to where the bull market broke out, right? Is that safe? If for some reason you broke out under 30,000 over here, and we said, okay, if we break 30,000, that means a couple of different things. Most likely we're entering an accumulation phase, but that doesn't mean we can't test that lower bound area that, like, for example, Peter's talking about down at $20,000, right? That would be completely reasonable and in play, unexpected, but hey, completely in play, right? If we're breaking 30,000, maybe lighten up on your liquidation level, right? Maybe take a loss and make that significantly lower just to be safe. It's when you get back above this line, in my opinion, that you could firm that up and feel better. If you were, and this would be aggressive, breaking out above this trend line and then moving your liquidation level below over here, below this area of this $30,000 print. I mean, do I think it's smart? Well, I personally do, but experts only, don't do it unless you understand the risk. Not only understand the risks, but if something happens where you need to lighten your liquidation level, you already know what it is in advance, and you're just kind of methodically following orders at that point, rather than being like a deer in headlights as prices coming down $10,000 on a big giant red candle, and you don't know what to do and you just freeze. So anyway, that's a good conversation. Thanks for bringing that up, Ali. Definitely like that over here. What else are we looking at over there? Boom, boom. It's a taco day, right? Good session, everyone. So, yeah, I think we have the strongest look at the markets across the board, right? Like, come on. Why is Market Watch not all over us and what we do over here, right? We know the levels to manage our risk around. That's all TA is. TA is knowing the levels to manage your risk around. It prevents you, for example, from buying yesterday over here at $39,000 into resistance. Do you remember yesterday we said over here we need to get above $41,000 in that area in order for this to be confirmed that we're putting the next leg up, right? Into the resistance, a lot of people buying it. I think Elon knew that we were into resistance yesterday. It's not the first time that he's tweeted at a very opportune point where it comes to carrying out what he wants to be carried out from a TA perspective. It doesn't matter either way. The best thing that could happen today from our perspective would be this just be a giant wick over here, price closing green today and or tomorrow. And that would just be like, listen, it was inevitable that you're irrelevant. And that would be the best thing that could happen today, right? Anyway, thanks for smashing the like button. I'm going to go over here. I'm going to play some honeymoon vocals just to set the mood a little bit. And I want to see if there's any other comments we could come back to. Maybe we'll just call it a tight, short session. You know, it was a good one. Oh, there we go. Pause. That was the one I wanted to get back to. So we were asking over here, and now it's coming up again. Lou was asking. I accidentally got rid of the comment. Lou was asking, though, what about a death cross, right? On Bitcoin, I pointed out, I retweeted 2 days ago. If you go to, here we go. You know, I pointed out, and this is what you want to look for. You know, hold on one second. I pointed out the possible coming death cross on Bitcoin. And I get the Rect Capital over here put together a really, really, really solid and great thread. Rect Capital also has a great understanding of the 4-year cycle. I can't find it. That's interesting, right? Hold on one more second. Let me see if I could find it. And if I could find it, I could share the link in the comments over here because it's something that you want to see. The questions are coming up over and over again. What happens if we have a death cross on Bitcoin? Here we go. Let me go ahead. I'm going to share this in the comments over here. Boom. You know, and laying out what all past death crosses, how they occurred, what the drawdown after the cross was, what the drawdown going into the cross was, the symmetry before the drawdown coming into the cross, and then after the cross for each past cross that has occurred, when this current death cross should occur, if it's going to occur. And if you're interested, this is the thread to read and understand. At the same time, and on the same day, Rect puts out a thread talking about a bullish MACD cross, right? And lays out exactly what could happen as that occurs. I didn't even read it. That's not where I'm focused in on or anything like that. But if you're interested, right? If you're interested in this type of stuff, this is the best thread on it, I believe. But at the same time, understand, he's not calling for a death cross to occur, and he's not predicting what will happen if it occurs, but he's saying this is when it would occur. Here's what's occurred in the past when it's occurred, and now you know. And the same thing, at the same time, he's saying at the same time, we're having a bullish MACD cross. And here, I didn't see what happens, but I assume it's pretty good stuff over there. All right, let me go ahead and, you know, play some honeymoon vocals over here and see what else we could talk about. Okay. Yeah, a couple of things to build off over here. First, the question should be watching over here, gold, Bitcoin. Listen, gold, Bitcoin, in my opinion, is all about the 4-year cycle on Bitcoin and what's happening on Bitcoin. You know, you could think of gold more or less as a stable coin, right? And over here, big pullback in Bitcoin, massive 53% pullback in Bitcoin, ultra massive pullback over here back into the last resistance on gold and Bitcoin. You know, if you think we're taking out the 30,000 level on Bitcoin, then we're taking out this resistance and we're going even higher on that pullback. If you think the $30,000 low is on Bitcoin, you know, and that we're going to be making all new all-time highs, and it's a question of when, not if, at that point, is this a gift to be positioned? Yes, but this is not the time to be trading gold Bitcoin. You know, that's during the bear market, in my opinion. Right now, you're wanting to look at trading, obviously Bitcoin versus the dollar. That's just my opinion, right? That's the way that I've seen it always for this particular phase when it comes to gold Bitcoin during the 4-year cycle. It's not during the bear market, yes, not during the bull market. Should we be looking at the dollar and dollar pairs today, even though we're looking to trade? And the question came up, you know, do we always ignore FX trades on Monday? Dean, no, not always. Okay. It's a good rule. It's a good practice. A lot of people, let's say, for example, you know, you could take 3 trades in a week. The weekends, you know, the market's closed. All of a sudden, opens up on Monday. Asia, it's repricing in lots of data that happened over the weekend, and people are like shooting from the hip, taking trades while the market's really volatile. Markets really often in Asia, you see a little bit of gap down, and those gaps are often closed. People getting like all whipsawed around. Is it much smarter? Have I learned over the years by not placing a trade Monday during London, but waiting for that New York session as price has digested everything a little bit further, and then making sure I understand, you know, what's going on, doing my work, looking for the setups, and looking for Tuesday night in London as the first possible opportunity. Doesn't even mean you have to take that. You still have Wednesday, Thursday, and Friday ahead of you. Yeah, that works out to be a lot better for myself. But if there's a good setup on Monday during London, you could take it. That's not a hard and fast rule at all. For sure, you could take it. Should we be looking at some dollar pairs right now? Let's do a brief, quick overview. I want to know what's going on over here. The support held on the Australian dollar, US dollar, right? And that's all we did was note yesterday that we're coming into that support. And I was very clear, we don't know that it's going to break or not. So far, it's holding, right? Are we still sideways? Yeah, I mean, we're still in this range. What about the euro US dollar? Winthrop in the comments yesterday saying that we had a conquering the market setup on euro US dollar. I don't know where or see that. You know, I was hoping you could post a chart to point that out to me. You know, euro US dollar is in an uptrend, looking to buy off support in uptrends. I didn't see a sell CTM setup on euro US dollar, and was having trouble just understanding where you were coming from, just to share my insight on that. But, you know, conquering the market's principles, we buy off support in uptrends and sell off resistance in downtrends. Never looking to pick the top or the bottom, but looking for that sweet spot of the trend, right? Pound US dollar, nothing's happening here, right? Euro US dollar, that's the hardest one that I see to read on. What about the US dollar, Japanese yen? You see, we were coming into the resistance yesterday. It wound up holding. It was that's the only observation we were making. We only said getting above that could open up a possible entry. Rejected by it, back down towards the support over here. Not much to say or do. And then what's the pound US dollar? You know, it held the bottom of the support. You know, so I mean, greatest lesson there is, you know, support and resistance hold until they're broken, right? And Heath, I know, said a few different times yesterday, watch out, all this price action could be retraced tomorrow. It was all retraced. But go back and watch if you'd missed yesterday's session, which was highly focused on the US dollar and FX, and all these levels that we just kind of looked at from afar that held. all we said yesterday was, listen, they haven't broken, they could hold, and wasn't trying to predict what would happen one way or the other. They all held, right? Same thing on the S&P 500. Coming into that level, we said, listen, as long as we hold that level, this is really bullish, And I talked about everyone keeps calling for the crash. Everyone keeps calling for the crash, I wish these people would spend more time being focused, understand that the markets are not crashing. That's where that meme comes from in our taco song, right? The markets are not crashing. Trying to get everyone to understand that you're going to do much better off with the wind at your back than always trying to fight it. Anyway, thanks for the session. We're going to keep it short and sweet. Very good. I enjoyed this one. That's what I want to be doing here with you all. Not only putting the work in each and every day, right? Not only making sure that I continue to have that awareness needed to conquer the markets and to stay laser focused on the most important trade that matters so I could ride the bull of all bulls, but I want to have a good time doing it. It's very important over there. It's the internet. It's the markets. A lot of people, it's so funny. People like yesterday I put out that tweet to Benjamin saying untrue. If you're right, for sure I'm going to want to find the tweet over there and what I said. It was in responses. I put out the tweet and I'm very clear and I'm like, untrue. If you're right, we're over there, untrue. I will consider you the prominent thought leaders, one of the prominent thought leaders. If we enter lengthening cycles, I'm going to be highly focused on your work. And someone's like, what do you mean that he's wrong? It's the internet and people are so crazy and people are so like, their emotional intelligence is lacking, right? And like it becomes a negative space from time to time. Not here, not in my house. If this at any point, wasn't an enjoyable experience where we're moving forward, learning and sharpening, iron sharpens iron all the time, then it becomes a different thing. I'm not interested. So thank you to the moderators for helping make sure that we remain focused, remain on signal, and help drown out who doesn't belong here. Many are called, few will be chosen. That's it at the end of the day, right? Anyway, thank you for the prayers. Thank you for everything. Thank you for smashing the like button here today. Listen, all we're going to do is keep continuing doing what we do. Probably won't be here on Monday, right? Unless we come home from the hospital before then. That's not even, I doubt it, I doubt it. Just a heads up. I'll update everyone on the Discord and through all the different channels. That's for sure. Have a beautiful weekend, everyone. Thank you for being here today. Enjoy spending the time with you. And CTM all day long, By the way, you could go to Bitcoin Magazine on YouTube and you could watch streams of some of the discussions, some of the panels taking place at the conference in Miami. Bitcoin Magazine on YouTube. let me pause real quick. The questions coming up is just why don't you consider diminishing returns, right? At 288,000 Bitcoin, market cap is over 6 trillion. I think this is highly unlikely this cycle. Well, that's not true. I do consider diminishing returns. The first video I put out, it's about a year and a half ago, and I say what my price prediction is for this coming bull market. And I put out, I do the math using diminishing returns. And I say we're looking at $160,000. That's the price target that I feel comfortable putting out there, feeling like I'll be correct, and make sure that you do the math so that if we hit $140,000, it's mission accomplished, right? That's the work that I did. I have considered diminishing returns. I consider diminishing returns before other people doing it now, right? But as the thing is I just don't focus on Bitcoin. I come from my background is the markets, and it's all of the markets and how they work together. And when I saw what was taking place with the uber easy monetary conditions over here, and then we saw that this cycle was not diminishing at all, but it was outperforming the last and was an average of the two. I want to be on the right side as quickly as possible. And I said, I'm wrong. We're not seeing diminishing returns, right? And here's what we're looking at. And I showed, do I think a $6 trillion market cap is too much? No, I don't think this cycle that we overtake gold's market cap, call it $10 trillion. I think that happens next cycle. But could we see a 4, 5, 6, by the way, diminishing returns, if we hit $200,000, we're not seeing diminishing returns, right? If we hit $180,000 Bitcoin, we're not seeing diminishing returns, right? What is it? What was the last cycle? No, hold on, retract that. That's not correct, right? That $200,000 Bitcoin would be diminishing returns for sure. Retrace, backtrack that. The last cycle, right? I don't even know. I guess it's $288,000. Would that be matching last cycle or just matching last cycle from where we are today? I'm not sure of that. Let's say I'm not sure because I only want to say something if I believe it to be true. But I believe if we match the last cycle's performance that we hit 288,000 Bitcoin, right? So, anything that and above would not be diminishing returns. Anything 200,000 and below, that would be showing strong diminishing returns. It gets iffy around 250,000. You could say you were right or you were wrong. I think that's as genuine as you can be. But I have considered it. I was the first one to consider it. I'm not the first one on the internet to consider it or in the space, but I was way ahead of it. And when I put something out there, I want to make sure that I look good and that I'm right. So I use diminishing returns to get to a price target for the upcoming cycle. I just don't think that's what's happening right now. And could it happen? Yeah, but rest assured, Remzi and everyone else, if I felt at any point in time we were seeing diminishing returns, reverting back to where, prior to QE, what it was looking like, well, we'll get on that page as soon as possible. But so I have considered it. I've considered it strongly considered it. All right, everyone. Have a beautiful day. Thank you, God, for the gift, this moment. Thank you for this gift together. Thank you for all of these friends who I consider family. Have a beautiful day, everyone. I'll talk to you soon.